This is The Blockchain Show. The Blockchain Show is a podcast that demystifies and promotes widespread adoption of cryptocurrencies and distributed ledger technology.
This is episode 45. Upcoming is Steve's interview with Don and Michael of Swap.
Ledger Wallet is a smart card-based Bitcoin hardware wallet bringing maximum protection level to your Bitcoins without sacrificing usability or control. Find the link in this episode's show notes.
After that confrontation, left me ringing my cold hands. We shared some information you might not recover from. And I'll watch your convictions melt like ice cubes in an ocean. You were so poorly cast as a malcontent.
I'd like to give a big shout out to Heather and Steve. Thank you for your many hours of work and dedication to the Blockchain Show. Best of luck in all of your future endeavors. Much love. This is for all you folks who are jogging. Do they say jogging anymore?
My name is Michael Oved. I studied math at Carnegie Mellon, I guess over a decade ago now. Went off and joined algo trading company that went off and we expanded into Asia, built out that business, and then IPO'd in 2015. I learned about Ethereum actually at a music festival through some other friends. Met Joe Lubin. Didn't know who he was or what Ethereum was, and kind of drank the Kool-Aid. And realized that you could rewrite all of finance. And so that got me really inspired, and ever since I've kind of been in the game.
Yeah, and I'm Don Mosites. I actually went to school around the same time that Oved did. Studied information systems. Since then, I've basically been working in early stage technology, building products for consumers and developers. Personally, an engineer, do lots of design work as well, but got involved in the space maybe towards the end of last year a little more heavily. I'd always had kind of an eye on blockchain as this like transformative technology, but the lights really started to switch on once we started to get a closer look at what could be done with Ethereum. So we got to working on exchange maybe a couple months after that. And that led us to the swap protocol.
Great. I'm excited to have you guys on the show. You had mentioned Joe Lubin. Would you say he's like the least known of the core people who founded Ethereum? Obviously, there's Vitalik, probably the most well-known, and then maybe Gavin Wood is the second most, and then Joe Lubin?
I think that there were 8 Ethereum co-founders, maybe a few others that can call themselves co-founders, but I think Joe, he formed consensus before Ethereum, before the Genesis block, and I think with the amount of success consensus has had in both enterprise and consumer space, I think he managed to make quite a good place for himself in the community.
So he was the one who introduced you to Ethereum, and that really. You saw that all the things that Ethereum could do. Could you tell me a little bit more about what you think Ethereum can do, in particular with Swap?
Yeah, so I think obviously the cool thing that's happening right now is are these tokens, and basically what that is the first global scalable asset class. The reason why that's powerful is because anyone can participate in these software projects from anywhere around the world, and that's kind of like putting the power of centralization at work and at scale. And so, I think that there's a lot of other things. This is the first thing that has already shown that it kind of proved blockchain. It's blockchain's killer app, and it's kind of proved that blockchain can be successful. I think, I mean, there's a number of things that I think it will affect. Anything from distributed computing to you can do derivatives, you can do stable coins. I mean, it's really because it's smart contracts. You can store them on a distributed network. You can run code on a distributed network. There's really the possibilities are endless for what this can do. I mean, and I think eventually you're going to see many parts of the internet itself rewritten.
And I think that so I think today primarily you have sort of imaginations of tokens as maybe primarily as like a currency, but I think that's kind of analogous to the first use case of blockchain being Bitcoin, and a major use case of Ethereum being tokens. But I think what we've seen with blockchain is that it has this sort of new expanded set of possibilities as a technology and as a transformative technology. And I think tokens will probably take the same route.
Do you think tokens will be, a particular token will be the highest market cap, maybe greater than Bitcoin and Ethereum, particular token on the blockchain? Or do you think the actual protocol, either Bitcoin or Ethereum, will maintain its dominance in that space or something like it?
That's interesting. I think that people have done analysis of like token launches versus like the native, the performance of the native tokens. And I'm not sure that we've really seen that the performance of tokens is really that much stronger than the native tokens. But that really just would be a complete effect of like the specific implementation of that token. And so it really depends on what that token means and what it gives to its holder, how it actually holds value. What the capabilities are, what it represents. As these tokens mature and start to represent and hold value for, bigger things, certainly will become more valuable.
A lot of the tokens out there, I think, are maybe towards the side of scams. How do you weigh in? How do you advise people to kind of do their own due diligence and not buy into tokens that are really scams?
I mean, I guess we try to avoid, just so busy at the moment that I guess we try to avoid, giving advice altogether. But really, I would say, I mean, you really have to look at the team. You have to vet the team. You have to vet the investors or advisors behind the project, people that are willing to attach their name to the project. I don't like using the word scam. Even though maybe some of these projects don't have the most merit, and there's kind of a gold rush going on right now where it's very easy to raise money. But I mean, as far as if you're looking at this market and you're really trying to participate, I mean, just like any other thing you would I guess buy, is just make sure that you know what you're buying.
Yeah, there was a recent article from the SEC saying that the DAO was a security. I'm a little confused by why the SEC needed to even weigh in. I think everybody knew that the DAO itself would be classified as security. They were more like the way it was structured. They felt like the SEC couldn't really go after anybody or couldn't actually, attach a particular party or particular company to the DAO. It was just, individuals. So there was really no way to go after a company. Did I miss? Yeah. Did I miss that? I mean, everybody knew it was a security, but what's the current landscape on these being unregulated securities?
Yeah, so I think there were a couple. There were a couple interesting things that came out of that announcement. Like you said, the DAO was structured as very much like a security. It had rights to make voting rights to allow it to make investments in other projects, and it also paid out dividends. And those are two features that the SEC specifically pointed to, saying that makes it very likely to be an investment contract. And then But then the other kind of interesting things that they said was that it doesn't matter if it's a digital asset or if it's a paper asset. It's basically substance over form. Is that so basically what they were doing is saying, hey, if you structure something as a security and it's a digital asset, it's still considered a security, which maybe, like you said, is also obvious. And then the last thing that I thought was very interesting was that they kind of put the onus on the exchanges, where they said that the DAO was listed on various exchanges around the world right after it completed its crowd sale, and because those exchanges had listed securities, they would be subject to they needed to follow securities regulation.
I missed that. So that's kind of the teeth of it, is they can go after the people, the exchanges that are listing these tokens that they deemed as securities.
Right, and my guess is, and very shortly after, you saw Bitfinex basically say that they're not going to support U.S. customers anymore, and my guess is those two things were related.
Yeah, I don't think it's even a guess. That's pretty much what they confirmed.
Yeah, and you got to figure this is their first kind of major statement, I think, likely setting up for kind of future frameworks. Drawing an analog with existing kind of securities classifications and things.
Yeah.
Probably setting up for future.
Be interesting to see what they can or cannot do. I know that it's really tough to regulate these decentralized.
Yeah, it's especially difficult because if you think about it, if there's like a gambling operation that the government considers to be illegal, how do they go after it? They basically shut down the banks that are willing to finance the operation, so they cut off the money supply. But in this case, because it's decentralized, I don't know. It's going to be significantly more difficult for them to cut this stuff off, even if they determine it to be illegal. They'll have to go after the people itself, I think.
Yeah, it's really a shame. I think people should be able to exchange, freely amongst themselves and whatever sort of business they want to have. Consenting adults should be able to do whatever they want with consenting adults, including buying, unregulated securities. It's kind of, sad that the country, the United States, is against letting adults take care of their own economic interests.
Well, there are, back to your earlier point about, people doing their diligence on these types of things and knowing what they're purchasing. A lot of people may just be swindled. It's easy, for people to get kind of confused or convinced, or there's a lot of schemes that are alive in the world today that take advantage of people's lack of expertise or ignorance in different ways, and that is exactly why these the SEC itself was established in the first place, is to protect their people, basically.
Yeah.
So it's a different world, and these are different circumstances, and they'll probably set up new frameworks that we can't fully comprehend yet, but there's likely some kind of compromise.
Yeah, I think there's definitely two sides to it. You don't want people to be scammed, but you also, want to let. I mean, me personally, I know a lot of people disagree with, letting consenting adults do exchanges amongst themselves without having a state determine what is possible or not. We could probably talk about that for way too long. The swap itself is pretty cool. Can you maybe start with swap by kind of talking about some of the competitors in the space and how you're different? Maybe like, Poloniex or 0x. I don't even know how to pronounce that one. Is it 0x or is it?
I think it's 0x. Yeah.
I mean, even those two are pretty drastically different approaches to the problem. I think the first kind of problem that we're trying to solve is the problem of centralization, and what that presents in a number of ways, in actually many network designs. But from a financial standpoint, a centralized exchange is holding funds on behalf of its users and becomes a very large attack target. And if that goes down, the funds go by the wayside. And the other side is this kind of global, this new global network that's afforded by blockchain. That if you have a centralized exchange and it needs to run specific, identity checks and things like that, like specific people operating in specific jurisdictions are subject to regulations and things like that, and are not necessarily able to partake in this kind of global token economy. And so there's the problem of centralization, which is one thing. And so we actually set out to decentralize exchange, which is also part of the mission of a protocol like 0x, for example. But our approach is pretty substantially different when it comes down to it.
Yeah. So
speak more to that.
Basically the way that you're trading these assets currently, for the most part, I would say 95%, maybe 99% is through centralized trading sources. So that's basically what these companies have done. They've basically just done like a copy and paste of Wall Street. It's just like, the NASDAQ runs in New York, a central order book, physically, logically centralized, run by a single party. That's the same as how Poloniex works. And this is, technology is at a point where you can do this on the blockchain. You communicate messages through the blockchain and do this in a decentralized fashion. And so basically there's the ability now to be doing this trading through not these centralized trading sources. So I think that what this whole community is moving towards is decentralized exchange. It was decentralized tokens, and then now it's like decentralized exchange. And I think that there's probably like a half dozen projects that are trying to get us towards there. 0x is one of them. Kyber is another cool one. Omisa Go is another one. Those projects are all based on order book technology. Those are based on basically a centralized location, or centralized and also a public location where you can find bids and asks and trade against those. In our case, what we're doing is we're passing the messages directly between peers. So you're not passing your order through a central party, which is an order book. You're just passing the messages directly peer to peer. And when and our thesis is what that allows you to do is come up with a really scalable solution to trading. And also because it's private, you can't. And one of the big issues in decentralized trading solutions is front running. In our case, there's nothing to front run. Also, we avoid race conditions that are present in a lot of these designs. So, I mean, we do really stand by our design. We've gotten a lot of great feedback. I think that our design in at least the long term will win. And people like we had a Japanese telecom company recently published their version of what a decentralized exchange is going to look like, and they based it off of our white paper. And we've also had the Raiden guys who are working on, I guess the Ethereum version of the Lightning Network come out and basically tell us that our design is very similar to what they're working on in their state channel design.
So how can you get rid of front-running using peer-to-peer stuff? I mean, it's a big, maybe not front-running, but with like NASDAQ, people will move, their computer or whatever over, an inch to get that less amount of fiber between the two of them to save that millisecond so they can get the information first. How do you prevent getting information first in a peer-to-peer network? What's the magic sauce, I guess?
A millisecond is a very long time, just so you know. The trading happens in microseconds and nanoseconds at this point. This is kind of like a side note. I think that what you're talking about is a race for processing what's happening on the exchange itself, and processing and reacting to what's happening on the exchange itself. Whereas what front running is it's basically someone being able to see the order before it's processed by the matching engine and act on that order before it's been submitted to the matching engine. And that's something that the person who has the ability to front run would have a distinct advantage over everyone else in the market, rather than there being a race based on time.
And that's like with Ether Delta and 0x, there's always the issue of people front running because the miners, anytime you put the order on a blockchain, the miners will be able to front run. And then Have exchanges been found ever guilty of? I think there's been instances of people who work in exchange looking at what order books are out there, looking at what sort of limit orders or stop losses are out there, and using their knowledge to their advantage and trading on their own exchange.
Yeah, that's a big problem in centralized trading. So I think what you're describing. So in a centralized trading solution, you have to trust the exchange to not act to basically run what's called a fair and orderly market, and that basically means that you're not giving certain people, including yourself, an advantage over other people. And I think that probably was a problem on maybe certain exchanges in the U.S., but regulation came to the point where that became extremely illegal, and people probably got in trouble for it, and they stopped doing it. I don't know if the centralized crypto exchanges are at that point where they're getting scrutinized, but I wouldn't be surprised if something like that was happening. I don't have any evidence of it. In the case of a decentralized trading solution, though, it's even more difficult to protect against that because anyone can be a miner and anyone can see this order information before other people. So it's not like you have to trust one party. It's just basically you have to trust the entire ecosystem to not cheat with an order book design.
Whereas in a peer-to-peer design, given that you're not operating through an order book and you're operating one-to-one, there's really nothing to front run.
There's not a front run, and also the messages are signed by the maker and the taker itself. So you can't. In the case of a public order book, when the order is submitted by a taker, the miner can sniff that order and submit their own information into that order. Whereas, and that's the mechanism by which they would be able to front run. In our case, you have the taker is passing his address to the maker, and the maker is signing the transaction that is only for that taker. And so even if a miner sees that order and wants it for himself, they can't do anything about it. They would have to request another order from the maker, and by that point, it's probably too late.
So when a maker creates an order, it's only specifically for specific takers, or it is? Okay.
Eventually what this is going to turn into is it's going to turn into something that kind of looks like an order book, but it'll be what we're calling a personalized order book. So a taker basically, theoretically, is connected to maybe 10 to 20 makers and pushes out this request on this peer-to-peer network to all these different counterparties, says, hey, give me a price. The makers all respond with their prices, and then the taker has a list of orders that they can. It's kind of like an auction where they have a list of orders that they can pick from. They pick the best, and that's their own personalized order book. It's an order book that's only created for them at that moment in time.
How do you prevent people from lying about what their price is?
Well, by the time those orders have made it into this personalized order book, they've actually been signed and addressed to the taker. And so the prices in the exchange and the actual order is set because it's been signed. The only thing that could possibly happen is if the maker ends up not having the funds or hasn't approved the exchange to occur. And that is something that we feel that could probably be addressed through like reputation systems, and other social mechanisms that say like if this maker is issuing orders that are bad and they're not filling for whatever reason, it could negatively impact a rating of them as a maker. But otherwise, these orders are priced and signed and ready for taking.
Is it a direct swap between participants, or does it filter through like a smart contract? How does the swap work? So
it's a smart contract that is actually performing the swap, and it's really a very simple, like a logically simple contract. It takes the order, verifies the signature, figures out which tokens are being traded, takes a look at the maker and taker on each token, and then actually goes out and calls the transfer function on these different token contracts. And so that actual exchange function is captured within our exchange contract.
Now this works for any ERC20 token?
That's right. It's currently standardized on.
What about
ERC
the ERC? Was it 223?
I believe that's kind of an extension. For now, we're really only using that transfer from function, and so we're just based on that. So anything that implements the other one, I believe, would be supported by our exchange as well. But that's essentially where we're starting. So
There's maybe a couple hundred ERC20 tokens out there that would have any sort of volume. What do you think the biggest market would be, and then how do you handle having such a many-to-many relationship where particular tokens may have no volume for weeks or months? Those type of issues where there's a huge volume discrepancy, where there's just tons and tons of different pairings. Is it only certain pairs that you can trade, or?
Well, so this is also what's nice about peer-to-peer is the economics of peer-to-peer trading are in our thesis more suited for this type of liquidity. So, like you said, these things sometimes only trade maybe 10 times a day. Things that trade only 10 times a day, really, you don't need an order book or something like that. And actually, it's to the detriment of market makers to be quoting on an order book. And the reason is that basically an order book is public, and so if you're a market maker and you're trying to quote on a public order book, anyone can see it. The second the value is off, someone else will come and try to trade against those orders in an aggressive way. And so basically, what the market maker has is they have a lot of risk by publishing to this order book, and not a lot of reward because they're never getting any of these trades. And so peer-to-peer basically allows the market maker to be communicating these quotes directly to people that actually want quotes, not to some public location where they're just hoping that someone else will take them. And actually, if you look at the FX markets, in a lot of the cases, these trade peer-to-peer. They actually don't trade on order books. The corporate bond market, which is another good analogy, because that has maybe 100 to 200 trades per day. That also trades on peer-to-peer networks, penny stocks as well. So there's a lot of analogies here where we think that the liquidity type is going to be really well suited for our design.
And what do you think the most popular pairs would be?
Yeah, I mean, probably. I think that'll change pretty frequently, but I mean, I could just think of the
popularity of the projects, right?
Yeah, I would just think about the tokens that have high market caps at this point.
So OMG is number 12. I think that's the first one. That's ERC20.
Which one?
OMG.
Oh yeah. Mm-hmm.
Then I think is 10x a ERC20?
Yeah, I believe so. 10x, Gnosis, Augur.
Yeah, Augur's down to 27. Golem is 28. Civic is 31. Status because they're English. Do you say status because they're English or status? 32.
I say status.
You say status, I think.
What do you think? What do you think of the term fog for these decentralized? Because you have the cloud.
Ooh, I like where this is going.
I don't think I've heard that.
Yeah, I didn't invent it. I'm just wondering if it'll catch on or not.
Actually, sorry, I'm unfamiliar with the term. So. What's the fogginess of it?
Well, the cloud, it's the old, you would draw, the internet in a network diagram. You didn't really know what was going on with all the different routers and whatnot, so you just drew this cloud. And that was how the term, I'm putting stuff up in the cloud. It's in these physical servers that are located someplace. But when you move it to, machines that are, down at ground level amongst people, peer-to-peer, that's kind of like the fog.
Oh,
cool.
Nice.
I'm into it.
I dig it.
So I was just wondering if that'll catch on. I think there's a Cisco product that does similar stuff where they've kind of called it fog architecture. So maybe that's enough of they have enough of a foothold where it is confusing, but I'm not so sure.
Yeah, I'm gonna take it.
Yeah, well, our token is called Air, AIR.
Yes.
So Air is going to help you do atomic swaps through the fog.
Breeze.
Yeah, so let's talk about, so Air is your token, and you have Air Swap. What is that?
Sure. So our original design, we call it the swap protocol, which is this peer-to-peer protocol that we've been talking about. Since then, actually recently, we through a ton of discussion and engagement with the community, and we had lots of positive feedback, and actually rolled a bunch of that feedback in the white paper. We decided to take it and actually implement it, or at least implement a vision of it. It's actually a pretty flexible design where you can actually implement storefronts, marketplaces, and even auctions. But I think the UX that Oved mentioned earlier with these personalized order books is really compelling. Going to implement the key elements of the swap protocol as services, and then start to build our own front ends against this, and we're calling that AirSwap. As for our token, it's essentially a membership token to be able to join this platform.
Yeah, and to add to that, we are launching the Air Token on the V1 version of our platform on October 10th.
Okay, so that'll probably be your most common token is Air?
Not necessarily. I mean, we're an ERC20 trading platform. We assume that there are going to be peers on the network that are going to be trading in a variety of tokens. Just for the fact that this is a token that you have to hold to be to join the ecosystem does not necessarily mean that it's going to be the most highly traded token.
Do you need like one AirSwap token for a membership, or is it like a certain amount?
That's a good question. We're working out the economics. We'll be releasing those details soon.
And so you can't become a maker or a taker without a membership, or
so if you think of it this way, so we basically have our protocol, and that actually includes an implementation of the exchange contract. So the smart contract is up. It will be on the public blockchain for essentially anybody to use. So if they follow our protocol, they can use the contract to fill orders, and that's totally out of our hands. And that's something we want to exist, outside of the services we provide.
And there won't be any fees associated with that or anything.
Right, no fees associated with that. But essentially what we're doing is taking these other elements of the design that facilitate that peer-to-peer exchange, including discovery and pricing data and information, to kind of help peers find each other, set the prices on these orders, and then finally make trades on the blockchain. And these first two services are clearly something that's valuable in this context. And so to interface and utilize those services is where the membership token comes in. So it's not anything like a transaction fee. It's this kind of one-time membership. Basically purchasing a token, you could sell it, you could transfer it to somebody else if they want to join as well. So it's a pretty flexible system.
Yeah, it's definitely such an interesting use case for we kind of started off with to use these ERC20 tokens, the tokenization. It's really, I think there's a lot of VCs that have no idea that they're the first ones being disrupted by this. It's kind of one of the places that I don't think was first on people's lists. It was, banks maybe, or lawyers or real estate.
Yeah.
But I think like the era of VCs is quickly being democratized or decentralized, where no longer do the really good deals go to only the people with really good connections. Now anybody can partake, in these industry-changing companies.
Yeah, and to add to, think about it, VCs are against the ethos of decentralization, right? It's basically a middleman that's, number one, it's expensive because they take a fee off the top. And number two, they only have access to their local deal flow. It's not like they're seeing every deal in the pipeline. They're only seeing the deals which come to them. And so this kind of network that's being established with these tokens, where anyone in the world can participate, is really a beautiful thing. I don't want to take away from VCs. I know a lot of them provide a lot of value to their investments. But it is kind of a cool thing that's happening.
Well, and that's even like crowdfunding starts to encroach on that industry a little bit as well. But that's essentially on kind of the funding side. Even on the flip side, when these software developers or companies go to just actually monetize their products and selling their products through tokens, is the other side of the coin, I think. So there's the funding and eventual monetization, and tokens are really making an impact, I think, throughout.
What's your thoughts on like technical analysis and looking at charts to determine whether it's a good time to buy or sell versus like
Yeah. So I come from very I guess quantitative finance discipline. So like we used to charting and stuff like that. We didn't really think it was. We thought we basically had the opinion that the computers could predict the market a lot better than the art, for the way you want to call it. However, I think in crypto markets, because they're so new, I don't think the algorithms are sophisticated enough where they're able to pick out all these inefficiencies yet. And so, I mean, I think charting does have a big place in crypto markets currently, but that evolves over time.
Is that something that Air will build into their UI charting or no?
Not necessarily. I mean, that's not really our kind of primary use case. We're just trying to make token trading accessible. Make it easy to use. Bring some new use cases to the table. I'm sure whatever existing charting tools and things that people are using are pretty compelling as is. But.
Yeah, it's probably all compatible. I mean, we might even be able to write into someone else's API and just.
What tokens do you guys own? If you feel like saying, or let me rephrase that. What tokens do you guys like?
I mean, just thinking about the decentralized exchange space, just because think about it all the time. I like the Misa Go project. I think that they're thinking about the technical. Creating a decentralized order book is very difficult, and I think that they're actually thinking through the edge cases. They're physically centralized. They have some solutions to prevent front running. So I'm a fan of that project. I don't know about the tokens. I haven't looked too deeply into the economics of the token. That's I guess the one that comes to mind for me.
And they just really did something with Vitalik. It was like a project where it really made it scalable, where you could do a huge amount of transaction throughput, and I forget the name of it.
Plasma.
Plasma. How cool is that?
Yeah. I think there's going to be a lot of projects like that where you're basically because the blockchain itself is linear, and you're adding transactions onto a linear ledger, and being able to kind of add sub blocks or add side chains or to somehow get away from this linear fashion will really improve the scalability of Ethereum and other blockchains.
It's really tough when everybody has to have a copy, an entire copy of the blockchain to scale. I think Bitcoin fell apart at 1 megabyte.
That'll be solved. I mean, that's not.
Scalability is a good problem to have.
Yeah. It's funny when you ask about tokens. You asked about tokens. I think about projects. I think about what they represent. One project that I like personally that we talked a little bit about earlier was Status.
Yeah.
Just as a community project and what they're trying to do, just from like a great. It's definitely in my wheelhouse as well. But I guess their launch was fairly successful. So.
Yeah, definitely really cool. I think in places like China where they have, I think it's WeChat, I may have the wrong name, but that's how they pay for things is with this mobile app. And Status really puts WeChat for the rest of the world on their mobile phone. So now you can integrate almost any sort of application inside of Status. So it's really, really groundbreaking.
Done some demos. We've had a hand in building some stuff within Status, which is pretty enjoyable. But yeah, to that point, there's mobile innovation in China and throughout Asia has always been years ahead.
And so your token launch is what, 1010? Did we get that right?
That's right. Yeah, Air on 1010.
1010. And the Air tokens, do they have any other utility besides allowing you to have a seat as a taker?
Not currently. Someday. We'd like to maintain that flexibility, but today it's about joining the platform, being a part of this global trading network.
Tokens are really weird to me. There's one in particular that makes me laugh, and I don't think other people find it as funny as I do. It was like the Hacker Gold token. There was like a hackathon promoted by like EtherCamp, and they're defunct now, right? The developer behind the project disappeared with the funds that he raised, or maybe they no longer exist at any rate. But yet the token had no use initially. It has no use now. It had a little bit of use. You could vote for like who you thought would win the project or who you thought deserved to win. And now it has no use because the project is completely dead. But the token still trades. Like there's still like a value to this useless token.
So that is funny. I think this actually goes back a little bit to your question about technical analysis, because there's a lot of just like movement and emotion and group, not group think, but just like people kind of like reacting to each other in different ways. And like ultimately, like these lines that you see on a chart are a reflection of what individuals are doing in these markets. And so, yeah, I mean, it could be something that seems totally irrational where a token that is defunct still holds value and trades in interesting ways.
It's
got
a cool enough name, I guess.
Yeah, maybe that's it.
Is there anything that I wanted to talk about that I didn't mention? You want to talk about the Bitcoin fork, Bitcoin Cash? Anything in the space going on that you find interesting?
Yeah, I think I'm glad to see Bitcoin get through, or at least in theory get through their scaling problems, come up with some sort of resolution. The Bitcoin Cash thing was really maybe unexpected, but it kind of proves that, I don't know, people are so afraid of forks. I personally don't think forks are the end of the world. I think it's just that's kind of like the cost of decentralization. So if you have a certain group of people that want to follow one chain and a certain group of people that want to follow the other, fine. There's nothing wrong with that. In my opinion, that's kind of the whole spirit of this ecosystem. I think that what goes along with this, which is kind of it's kind of interesting, is that when you make when we're working on stuff, we make a code update. We just bounce the computer or bounce the box, and you launch the box, and then it's running on the new version. But in the case of these decentralized protocols, everyone has to update the code at the same time in order for anything to take effect. I mean, unless it's a soft fork scenario. And so I guess the project that's trying to tackle this is by putting a governance layer into the protocol itself is Tezos. And, we're a fan of all things blockchain. We're a fan of Bitcoin. We're a fan of, obviously, we think Ethereum is where it's at right now. We're going to follow Tezos closely because we think that that's a really cool project.
What is Tezos for those who don't know?
Tezos is a platform that also supports smart contracts. But like I said, they have implemented a governance layer into the protocol itself, so that if and it's also a proof of stake mechanism, and if the people vote on a certain protocol update, or they propose and everyone votes on a certain protocol update, that's what the new state of the chain will be. So there's no potential for, I believe there's no potential for hard forking. Or not 100%.
I mean,
sure.
There would have to be, because even if like everybody votes one way, you can still recreate the chain.
Yeah.
But it just makes it a little easier to upgrade. I mean, because I look at something like the Bitcoin hard fork, and I think like maybe 5% of people really like the 1 megabyte, and maybe 5% of people really wanted to fork off from it, and maybe 90% of the people didn't care. I think most people involved in Bitcoin don't have the knowledge or the ability to own Bitcoin anyways, to determine whether it's a good idea to increase that 1 megabyte or not, or at least that's my particular opinion. You look at like how the miners reacted to like the segwit 2x proposal, the New York agreement, and it seemed like 80 to 90% of people were in favor of like doing both, increasing the 1 megabyte size as well as instituting segwit, but very, very small percentage of people wanted to keep segwit, or were very strongly about only segwit, and a very small percentage of people were very strong about like no segwit. So it's like with the American Revolutionary War, it was like a third wanted to stay with the king, a third were indifferent, and a third were revolutionary. So with Bitcoin, it was really like a tenth, 80%, and another tenth. There was just this big middle that didn't have an opinion, and they kind of stuck with the segwit side. So it'd be interesting to see what happens.
Yeah, it's like with anything, is that even with the design of a lot of these projects, it's a lot of the politics and the emotion come into play in a meaningful way, and that's just because we're human, and so logic doesn't necessarily prevail.
Yeah, there's a lot of emotion within forks. I know that with the DAO fork there was a lot of emotion. I think that was another one where it was kind of the case that a good 20% of the Ethereum community was not in favor of the hard fork, but there was a much larger percentage of people outside of Ethereum community who didn't want them to fork that kind of jumped in and saved, or picked up the leftover chain.
Yeah, and there's the people have adverse incentives, I think, as well. There's not everyone is necessarily making these decisions based on the best thing for the network. They might be making decisions and pushing for things really hard based on their own agendas.
I really enjoyed the talk. Very interesting stuff.
Yeah, and likewise.
Cool.
Yeah.
Very fun.
All right. Well, thanks for coming on, guys.
All right.
Thank you very much.
Catch you soon.
Are you looking for an easy way to buy Bitcoin or Ether on a safe, secure platform? Coinbase is the easiest place to buy and sell digital currencies. Sign up today as a friend of the Blockchain Show, and if you buy or sell $100 of Bitcoin or more, you'll earn $10 of free Bitcoin for yourself and $10 of Bitcoin to support this show. Join now using the link in this episode's show notes at theblockchainshow.com.
Here's Steve. He's going to be stepping away. Not all the way. We're going to keep going, folks. Next week, we'll see you on Sunday night.
To learn more, visit theblockchainshow.com.